Welcome back to the channel and to level 3 of financial sacrifices. Today, we are going to just do some stuff. Alright, the level 1 video, which is linked below, discusses cutting back on excess spending and entertainment expenses. Then the level 2 video, which is also linked below, discusses how to maximize the utility value of the things that you need to spend money on and then making the same amount of money that you have go further. But sometimes utility and value can be a little less obvious or a little less direct, and recognizing non-value added expenses is pretty much the next step to improving your utility value. There's a reason this is after utility value, right? You have to do this to get the greatest utility value possible. This is the next concept. It's almost like I planned that, like it builds on the other one, which was level 2, because now it's level 3 and it's anyway. So anyhow, what are non-value added expenses? This is pretty much what it sounds like, right? These are things that you're doing, that you're paying for, that take your resources, your time and money, but don't add any tangible value as a result. Basically, it is all cost, it is no benefit. These things are 100% a waste of your time, a waste of your resources. This was actually a huge portion of my career when I was working as a manufacturing engineer, was finding and then eliminating non-value added expenses to reduce the cost of production programs. But what I'm getting at here, right, is I was really good at identifying these things, and you need to have that skill as well if you want to be able to get the most out of your budget and have your money go as far as possible. By doing that, over the course of 4 years, I eliminated $30 million of expenses. So I'm pretty good at this. So what I'm going to do now is explain to you what to look for, because this is literally my day job. Now, the examples that I will focus on are going to be on the monetary side, but I want to make this clear. This applies to not only the monetary side of things, but also using up your time. But the first example I'll use here is with a physical object, okay? So let's go back to the level 1 sacrifices video where I talked about buying useless things on like Amazon or eBay or whatever. Let's say you go online, you buy yourself a slingshot, and then you're going to say, oh, it has a utility value, I'm going to use it for hunting, it's fun, it's whatever. But again, this series is about making hard choices. It's about being honest with yourself. So being honest, if you get a slingshot, you're never realistically going to hunt with it in your life, for 99.9% of people, right? You're just not going to do it. So once you use it 2, maybe 3 times, it's probably just going to sit in a closet, in the basement, in the back of your car, wherever you left it and you forgot about it. It's pretty much going to sit there and rot until you eventually get rid of it. So before you jump in and say, oh, it has utility, I enjoy it, and blah, blah, blah. Again, if you're trying to be honest here, the only real tangible long-term utility, especially considering you're not really going to use it, is that it gave you that temporary dopamine hit when you were trying to mask the other problems in your life by buying something useless online for that instant gratification of opening a box once it arrived in the mail. But what you'll ultimately find is that that experience was hollow, it didn't resolve any of your issues, and then you'll be complaining very shortly thereafter that you have no money left over to afford your groceries. Like I said, the series is about honesty. You have to be able to make these observations if you actually want to progress. So once you figure out how it's actually going to be used for the bulk of its lifespan, which is sitting in storage and not being used, it doesn't have any real long-term utility when you factor that in. The reality is, if you're not actually using it, it's not something of value to you. That makes it non-value added. Pretty easy to follow along so far. So here's another example, but this one isn't with a physical object. This is going to be a little bit more indirect. However, this is going to impact everyone who ever watches this video, and that is traveling. Now, I'm not talking about like vacation specifically. I'm talking about commuting, getting places, going to stores, or going to your office. It is about the time and money that you spend going from one destination to a different destination. So for example, if you go and you buy groceries, which, you know, most people do because they need to in order to survive, the real utility is the groceries themselves, right? It's obtaining them. For argument's sake, let's say it's the same store with the same prices. The cost of the groceries is going to be the same whether you live a walking distance from the store or if you have to drive 5 hours to get there. Either way, the utility functionally of the groceries themselves serves the same purpose. However, that drive to and from the store does not give you any additional utility from the groceries that you're getting. So if you live 5 seconds from the store and you can literally walk downstairs and it's there, versus if you live an hour away, let's say it's like 50 miles away or something, and you spend $20 on gas round trip trip to get there and back. The extra $20 of fuel that you spent or of extra wear and tear on your car, that doesn't make the groceries last longer. That doesn't make them taste any different. That doesn't make them any more nutritious for you. Assuming the store is the same, you're not getting better quality food because you drove further to get it, so therefore the commuting to get there is considered non-value added. The utility does not change because of this other thing that you're doing to get it. Similarly, let's say you're repairing something on your house and you need 5 parts. There's a total cost of $100 from your local supply store. Now, if you drive to the store one time and you buy everything, let's say you spent $5 on gas round trip. But if you started fixing whatever was broken, then you realize you need the next part, you go out again. Then you realize you need the third part, you go out again. And you do this for all 5 parts, suddenly it's not $5 in gas round trip, it's now $25 in gas because you made 5 separate trips. All of these additional trips cost you more money, but there's no added utility. At the end of the day, you have the same parts in your hand, you spent the same amount of money on those parts, and then those parts accomplished the same end goal of repairing whatever it was you were fixing. So basically, the 4 additional trips are all non-value added when you could have done the whole thing in a single trip. So here is the biggest way for most people to reduce non-value added things. Drive less. That's really what it comes down to. Minimize the number of trips that you make to stores, but also if you're going to multiple places, optimize the route so you're going the shortest distance or taking the fastest route possible depending on which you value more. For example, let's say I have to go to 3 locations and if I hit them in a certain order, it's 3 miles, but if I hit them in a slightly different order, it's 3.9 miles round trip. That's an additional 30% more driving, which means 30% more gas and therefore 30% more cost. If the utility here is that you're going to these stores and you're buying the same things, doing that extra driving doesn't get you any additional utility. You just drove farther to do the exact same thing. So ask yourself, can you plan ahead? Can you take better or more efficient routes? If you have to hit a bunch of the stores, what is the best way to hit all of them to minimize your total time and to minimize your total distance traveled? Or if you have to make a designated trip to one store and it's a good distance away, is there any other store you need to hit while you're in the same vicinity to save yourself another trip? Or can you not go to that store until you're doing something else in the area? It's a shorter distance out of the way and therefore you save time traveling there compared to where you're already located. Maybe that store is 5 to 10 miles out of the way normally from your house, but when you're driving home from work, it's only 1 mile out of your normal commuting path. It's things like this where you're thinking about where you're going and how those things line up that give you a lot of opportunities to kind of stack these things together and optimize them in the best way possible. One caveat I do want to add here too is that there are obviously different prices between different stores. So like for example, if there's 2 grocery stores in your area and they're different brands, some might have lower prices than others, but one might be further away. When you start evaluating it that way, you'll start to realize whether or not it's worth traveling that extra distance and that extra time to save whatever that dollar amount is. You have to do that math on your own. Which one's going to save you more money from the distance traveled versus the price of the groceries themselves? Because if you're spending $6 in gas to save $2 at a different store, probably not worth it. Now here's my next example of non-value added travel. This one's going to strike home for a lot of people, especially in the current job market, and that is commuting to work. Now let's say you have an entry-level job and post-tax, post-deductions, your take-home is $10 an hour. Let's say you live really close to your job. You're, I don't know, half a mile or a mile away. What is your income? It's still that $10 an hour post-tax. Let's say now that you live an hour or 2 hours away from your job, but you have to commute in every day. Well, your pay doesn't change just because you're commuting further. If you drive 10 minutes or 45 minutes, you're still making $10 an hour after tax. Your commute is a non-value added expense. This is actually part of the reason that remote work is so popular, is because the cost of commuting, that with the high prices of gas, is not an insignificant cost. So that is a very real toll on the budget of people. And if the utility value of you showing up in person is that you keep your job and don't get fired, it's something you have to do. But beyond that, commuting further is non-value added. Other than the baseline utility of maintaining your job, it doesn't really pay to spend more time driving. Now, again, a caveat here, there are times where you have to drive to a different city that might pay more. In those cases, again, you have to balance what the pay differential is versus the commuting costs. But in general, if you keep the same job and you move closer or farther away, that is going to directly impact how much money you have left over at the end of the day. But again, looking at this from a utility perspective, you driving to work doesn't impact the company's end product. It doesn't mean that they can sell their product for more money because you drove farther to get there. So as a result of that, that is non-value added. Let's go through this example using some numbers. So if you live really close to your job, you can walk, you can ride a bicycle, you can take public transportation. So let's say that it costs you roughly $2 per day on average to commute both to the office and then back home. So that's $10 a week, $40 a month, or $520 per year to commute. Which means going back to the $10 an hour of take-home pay post-tax, you would have to work 52 hours or 1.3 weeks over the course of that year just to cover your commuting expenses. Now let's say, for example, that you lived further away, you need a car to commute. How does that factor in? I'm gonna round a bunch of numbers to make this a more clean and simple example, but these are semi-realistic cost figures here. So let's say gas is $5 a gallon, because that's pretty close to the national average at the time that I'm filming this. And let's say that your vehicle gets 20 miles per gallon, which is pretty typical of a lot of vehicles in the US, especially for older cars or SUVs. Going through the columns here, this is the distance that you're commuting in miles per day. So it is twice the distance that you live from your job because you have to drive there and back. This is how many gallons of gas you'll consume per day if you get exactly 20 miles per gallon. But those aren't the only expenses you have with a vehicle, because you also have maintenance, you have insurance, you have registration fees. And as you commute further, you're going to have more maintenance. You're going to have more expenses in this category. Typically, people register their car once per year. They take it to the shop once or twice per year. So if you take this at like an annual scale, you can break it down to what it costs you per month, per week, and per day to use your vehicle. And I think the best way to look at this is as you live farther and farther from the office, the commuting cost is a larger and larger percentage of your total pay, assuming that your pay is constant, that you get paid the same amount regardless of how far away you live. But even using these numbers, which are really realistic numbers, if you live 25 miles from your job, it's a 50-mile round trip commute. If you make $10 an hour post-tax, which is up to $15 an hour pre-tax, that means you are still paying a third of your total wage only to the price of commuting. But this also doesn't show the time that it takes and the stress that it causes from commuting that far. That's very taxing. That's a whole other consideration on its own. So on one hand, these numbers are just examples, right? So your vehicle might be more or less reliable, so your maintenance might be higher or lower. Your insurance and registration might be higher or lower depending on where you live. Some states charge annual fees or annual taxes on vehicles. Gas prices fluctuate. Your fuel economy might be better or worse. You might also have to consider paying for things like tolls. So there's a lot of variables that can affect this, but these are good ballpark estimates to start from. But regardless of how these numbers change from my example, it should be fairly apparent that commuting costs are not insignificant. The cost to register, insure, and drive a car to work 10 miles each day, then 10 miles home, which is less than the average commute in the United States, will cost you over $4,400 a year just based on these average numbers that I pulled. But let's say you make more than that, right? Let's say you make $40,000 a year after taxes, which is about $55,000 a year if you have no state income tax whatsoever. Even so, being 10 miles away from your job, which is still less than the national average, means you're still spending 11% of all of your take-home pay only on your commuting cost. That is strictly to get to the office and back home. That is a substantial portion of your total pay for no added utility. You don't get paid extra for that cost, you don't get paid extra for that time. So again, commuting is an entirely non-value added expense. So how do you handle this? How do you eliminate these expenses? So for anything like this, where you need to do something, like you need to show up to work, but where there's no other utility or added benefit involved, try to do your best to minimize the expense as much as possible. So let's go back to this example here. Is there a way that you can get housing that is the same price and the same utility bills as your current housing, but is physically closer to the job? Is there a different way to drive your current vehicle that gets better fuel economy? Can you get cheaper gas, or is there a fuel that's more efficient even if it's more expensive? Like I'm showing in this table, if you can eliminate owning a car altogether, if you go strictly to public transportation, you can save at least $2,000 a year depending on your city's transportation costs. Quick note here is that I realize a lot of places with public transportation also have higher housing costs or rent costs, and that kind of offsets a lot of this. And I also know that a lot of regions and towns, my own included, don't have great public transportation, so that's not an option for everyone. In a future level of this series, I'll touch on how those factor in together and how to go about that. But really the key here is you have to look at these numbers. You have to start evaluating every single way that you spend money and look at all of these hidden and indirect costs and see if there's a cheaper alternative. Again, can you do the same thing? Can you get the same utility, achieve the same outcome, but do it at a lower price? Or alternatively, can you eliminate the expense altogether? Again, that is the ideal scenario here. So once you start really digging in, once you start really looking for these things and actually figuring out what's non-value added in your daily life, you can start chipping away at this list, and the savings add up substantially, and they add up fast. For example, when I started doing a lot of this, I found a new place that was closer to my job, so I shortened my commute. I changed my driving habits to increase my fuel economy. I was driving a lot slower, I was driving a lot less aggressively, and then I minimized and optimized all other trips I made, and I pretty much didn't do any unnecessary trips, and I saved roughly $7,000 a year doing that. Then after the start of COVID, where I had the option at my current job to start working remotely, I did that as much as I could as well. That saved me an additional $4,500 per year. Again, in both of these cases, completely non-value added expense, wasting literally thousands of dollars. Like I said, the commuting and the unnecessary travel is the biggest and most common non-value added expense that a lot of people have. Another one is like if you buy a lot of food products that go to waste before you use them, you don't get any of the utility of eating the food and you're just throwing it out, so that's non-value added as well. But try to think of these from all perspectives and feel free to comment them below just so other people have the same awareness that you do about them. Again, the whole point of the series is to try to help as many people as possible, and I think that's probably one of the easiest ways to do that. So with all that said, congratulations, you have officially finished level 3 of the Financial Sacrifices series. These are all the best examples that I had and that I personally did to reduce my non-value added expenses, but like I said, there are plenty more out there. If you found this information helpful, please consider liking the video or subscribing to the channel or sharing this with somebody else who might find it helpful as well. All of these help the channel grow, and it improves the odds that YouTube shows this to other people, thereby helping them as well. But either way, that's going to do it for this episode. Here is a link to the next part of the series. I want to thank you guys for watching, and I will see you next time.